Okay, guys, so just to kind of progress on with areas of inefficient price action, how can we physically get into the markets to profit? Well, the answer is actually very, very simple. And this is the thing. Trading does not need to be overcomplicated. Look at this area here. You can see there's an area of inefficient price action. You can see price has inverted this area after sweeping liquidity. You can see clearly price is looking to push higher. And when you have a huge area of imbalance, that is honestly a telling sign that we are probably going to move higher. So you could enter in here with your stop loss below the imbalance, possibly at the second candle, targeting maybe that high. Now, that would give you really good areas of risk reward. However, the chances are you can see there you're not going to get in. So you could enter right at the top for next to nothing risk reward. Or you could maybe come down, meet in the middle for a pretty good risk reward, 1 to 2. That's okay. Okay, so you can see in here that would have played out pretty nicely. Vice versa as well. When you look at this area here, you can enter maybe in the middle. You can target the area there for a 1 to 1. You can try and hold it for a 1 to 3, a little bit higher. Again, you can get into the market in this situation here. I generally firmly believe to be truly successful in the markets, you are going to have to get used to entering on higher time frames. You can see within this SIBI here, you could have entered at the end of here because this wick is quite big. So you could have entered in here to target, which is clearly this area of liquidity right here. So you could target that area there for a 3 to 1, or you could target in here at the start for a 2 to 1 because price could just tap it and go down. Yes, you have to endure drawdown, but you have to endure drawdown a lot. You could have been really, really tight with your entry and hope that price would come up, and in this instance you can see it did. Now, I understand that people like waiting on smaller time frames and things like that, and that's absolutely fine. What we can then do when we get into this area is wait for price to come in here and apply it to time and price. And if we actually go down to a smaller time frame and observe what price action was doing when it came into this area here, and as mentioned, price is extremely fractal. And everything's vital about how price moves within the start of sessions. And you can see here, if I use 8 a.m. At 8 a.m., this candle here, I'm just going to make that a little bit less visible. This was your manipulation, price coming lower. You can see here price is consolidating. Now, we're inside an area of imbalance on a higher time frame. And price has given you an aggressive sell to the downside. So if we actually zoom into that area, you've got, and I'm just going to delete this area right here, you've actually got another sell side imbalance, buy side inefficiency being created right in front of you. So that is your sell side imbalance, buy side inefficiency right in front of you. And once again, that is at the open of London session, 15 minutes past 8 o'clock of the London session. You can enter inside this area here at the London session, inside your area of inefficient price action. You can have your stop loss above there. You're targeting this line, which is a higher time frame price action for a 4 to 1. You could bring it at 50% for a 5 to 1. If you risk 2% on this position here, you've gained 10% of your growth. That passes an FTMO account in one trade. Obviously, you might risk a little bit less, but you could look for 3 of these every single week. You would fly by doing this, and we're not going to a smaller time frame. I'm not going to show you smaller time frame action just yet, because in all honesty, guys, you have to understand you don't need it. Everything we've put into practice so far, everything we've done so far is enough to get you funded. What I see a lot of people doing is overcomplicating it. Overcomplicating it can seriously cause you so much damage. And it's so important that you just remember the basics. 4-hour price action, 4-hour area of sell side imbalance, buy side inefficiency. We've come back into the area on a 15-minute time frame. At the London Open, price has dropped significantly lower. Now, we didn't see an obvious manipulation which we would like to see, but when you get an Asian session that is quite expansive, you don't always have to have it. And then we can see manipulation in the form of this high here being taken. But let's say, for example, you missed this area here and you didn't actually get in. Let's say you came in late, or you didn't trust it, or you were a bit worried, or you just want to wait for extra confirmation. Well, you can stay on this time frame and wait for another area of sell side imbalance to be created. So that there is sell side imbalance, buy side inefficiency. So once again, you can see within this area here, we are creating more areas for you. And this is what's so powerful, because once again, you could get in here. Where am I putting my stop loss? Not at the first candle, at the high of the second candle. Where am I taking my profits? Because targets is just as important as entries. I've said this before. A 3-to-1 in a day's work. So you're coming out of the position at 2:30 at the New York Open, and you entered this position at 12 o'clock. 2.5 hours to gain, if you risk 1%, to gain 3% on your account. 2.5 hours work. If you entered at 50% of that area, that's a 5-to-1. If you entered right at the top, that's nearly a 10-to-1. Most people would enter around 50% or around the front. I would personally enter around 50%. Because that's quite another big imbalance. But this price action is stunning. And this is all happening within your 4-hour sell side imbalance, buy side inefficiency. So if you don't want to enter a 4-hour time frame, don't. Wait for smaller time frames to show you. Don't sit on a 1 minute waiting for things to happen. Sit on a smaller time frame, such as a 15-minute time frame, a really trustworthy piece of data. You could have entered in both positions. You could have entered in 3 positions. You could have had a small entry on a higher time frame within this 4-hour area up here. You could have had your second entry in here. You could have been third entry in here. You could split your risk 0.5%, 0.5%, 0.5%, 1.5% risk on 3 different setups, 3 different types of profit coming into you. The gains are seriously there. Because if that could give you 1.5% in a 1 to 3, this could give you 2%, 3%. This could give you another 2%, 3%. You could be 6, 7% up on 3 different positions. And you've only risked 1.5% today. Like, all we're doing, we're using one pair. We're using one area of sell side imbalance, buy side inefficiency. And we're utilizing more areas that are created. Sell side imbalance, buy side inefficiency. Sell side imbalance, buy side inefficiency. What is price doing here? New York session, 230. That's the 230 area. Price pushes higher. What is it respecting? Areas of imbalance. Sell side imbalance, buy side inefficiency. The market's closed now because it was Friday, so the market will tend to close. But look at what it's targeted. More liquidity. Targeting liquidity, pushing higher. Targeting more liquidity. These areas are very, very, very powerful, ladies and gentlemen. And if you want to be profitable, start getting good at understanding areas of inefficient price action. Do not for 1 second neglect areas of inefficient price action. Because the market, as I've explained to you now over 3 or 4 lessons, the market is engineered to seek liquidity and to rebalance in areas of inefficiency. And we are using the markets and reading it like a book. Chapter 1, 4-hour time frame, area of inefficiency. Chapter 2, area of inefficiency on a 15-minute time frame. Chapter 3, entry within it. Chapter 4, entry within the next area of inefficiency. Chapter 5, area within the next area of inefficiency. Why this area of inefficiency and not this area of inefficiency within here? Because New York session creates manipulation. During that point of manipulation, we expect highs to be taken, more liquidity. So we wait. That is how powerful areas of liquidity and inefficiency are, my friends. The London session creates volatility right here. And the New York session creates volatility. So you've got a couple of lessons to kind of do some work with. I would urge you all to do some back testing and just kind of understand what happens in these areas of inefficient price action. I would work, as I've said to you before in earlier stages of the course, work with maybe 4-hour areas of inefficient price action. Backtest what happens on 15-minute areas of inefficient price action. And also understand that if you backtest this and enter inside 4-hour areas, you could be so profitable, guys. You could be so profitable. Sometimes it's about just dropping the ego and stepping away from the 1-minute chart, the 2-minute charts, to realize the higher time frames is actually all you need to worry about sometimes. But utilizing better risk reward on smaller time frames is completely understandable as well. So with that, I hope you've had some value in these couple of lessons, and I will see you on the next one, guys.